Hi everyone, my name is Nisi. Welcome to my first YouTube channel. I recently started investing and I thought I would bring you onto my journey. I believe in financial literacy for women and that's why I started this channel. First off, I started investing with really small amounts and this is because I'm working a 9-to-5, so entry-level job. And the other thing is that my parents also immigrated to Canada when I was young, so I'm not really starting off with a lot of money and I imagine that we're both in the same boat. I know that many people find investing in stocks to be risky, complicated, sometimes intimidating, but that's probably because we don't have enough information, so it's obvious that we're not going to be confident to begin with. This makes sense because when you're investing in the stock market, you're putting your money at risk and well, you don't want to lose everything. And when we don't have enough knowledge about the stock market itself, it's kind of hard for us to make any decisions related to investing. On this channel, I will take you guys on this journey with me, and this is because we want to learn how to make money and become financially independent. We'll break everything down, go through the numbers, analyze different companies, and learn that while investing in the stock market is a long-term goal, and eventually we want to build wealth. Money. When I say wealth, a lot of people tend to think of the word, well, selfishness or greed, but it's actually the opposite. Think about it. How can you give to others when you have nothing to give? Wealth can give us a lot of freedom, and this is the freedom to take charge of your time, invest in the projects that you believe in, help the people that you love, and even accomplish the things that matter to you. For example, I've always wanted to build a school, but I won't be able to accomplish that if I'm still working my 9-to-5 in the next 25 years. By investing in the stock market, you can detach your time from money and actually reach your goals a lot quicker. There are a lot of YouTube channels out there that are making videos about how to grow your money 10 times overnight by investing into companies that barely make any profit. Tesla? Yes. On this channel, the goal is to actually learn to invest properly, not taking any shortcuts because it actually does take time. That being said, I want to look at numbers, spit facts when I have to, because the goal is to make money and not lose money. We can't afford it. I'm on minimum wage. I hope my videos can be a source of motivation for people who are on the fence about investing or those who have actually never even thought about it before. In this video, we'll talk about why it's more important than ever to start investing today. So get comfortable, make some tea, pause the video if you have to, and let's get into it. Let's get it! Okay, so we're going to be looking at numbers in order to understand why it's important to start investing early. If you're not good at math, don't worry. Just stick around, you'll see it's quite simple. I want to start off by saying that the stock market normally goes up by 10% every year. What this means is that if you were to go and put your money in the market as a whole, which is the most basic or simple way of investing, your money will grow by 10% every year. I'll go over a few examples just to show you what that really means for us investors. Okay, so I'm going to show you guys what it would look like if you decided to invest $1,000 at 25 and what that would become in 35 years. In this example, we're assuming that the market goes up at a rate of 10% per year. This is the historical average. We'll also assume that you do not deposit any more money after the initial first K. So by the age of 25, that money that you've put into your investment, you didn't touch it and you didn't add anything else. As you can see, you have an initial deposit of 1K. And then you can see that in 5 years, that 1K has already turned into what? $1,610. And then we can look at 55. What's happening? Your money's already compounded up to $17,449. And then at 60, so we were looking at investing for 35 years. This is probably your end goal. And look what's happened. You have $28,102. If we were to graph what that looks like, you can see that your money grows at an exponential rate. So you can see that in the beginning, obviously, what's happening at 25 to 30, not much. Your money's growing, but it's small gains. And then from the age of 55 to 60, look at that. The gains are just getting bigger and bigger. And that's how you're able to get to 28,000 without even adding any more money after the initial deposit. And that, my friend, is the power of compounding. What that means is that the longer your money compounds itself, aka stays in the market, the faster it will grow. The moral of the story is that every dollar you're investing today has a larger impact later on than at the beginning. Now, if that's not enough to motivate you to start investing now, let's go through another example. Let's imagine a scenario where a 40-year-old is trying to retire as a millionaire, so in the next 20 years, by the age of 60. And then we're also looking at another person in this situation, a 20-year-old who is also trying to become a millionaire by the age of 60. What we can see is that the 40-year-old, in order to reach their goal of becoming a millionaire by the age of 60, guess what? They have to invest at least $1,400 a month. This is doable. It might just take some time and, well, sacrifice and discipline. Maybe they have to give up some holiday trips, ditch their expensive car, downsize on the house, or maybe think twice before getting the new iPhone. Essentially, it's doable, but they would have to invest aggressively, and that has an effect on their lifestyle. If we look at a 20-year-old who has an extra 20 years on their timeline in order to reach the age of 60, well, they only need to invest $190 a month to get to the same goal. At 20 years old, if you have a part-time job or you're working, you can afford to save at least $190 a month. I mean, this depends on your situation, but if you're living at home and you don't have to pay rent yet, this is definitely doable. A lot of us spend so much money on food, going out, and it probably adds up to more than $190 a month. So this is something that a 20-year-old who has the goal of obviously creating and building wealth would have to sacrifice, but it's doable. As you can see, $190 a month is not a lot of money to invest on a monthly basis in order to reach $1 million goal. And we're assuming that you're paying $190 by the age of 20, and that's probably because you don't have a lot of money. But think about it. What happens when you're 35? Maybe you have a career going now, and you can actually invest more money. So it looks like you might be cutting that timeline short. You could even become a millionaire by the age of, 55. So it's just to say that it's important for us to start thinking about the future a little earlier when it comes to investing. Which scenario is more realistic to you? That just goes to show that we shouldn't actually wait until we feel that we're financially stable to start investing. You can actually start today. Even though you're dealing with student loans or a low salary, it's possible to make money in the stock market. I'll give you one last example to really get the point across, okay? To paint the picture for you. Every dollar you invest in 2021, this year, will become $11 in 25 years. That's by the year of 2046. Maybe we'll have flying cars by then, hopefully. Now, let's say you were to wait another 5 years because you feel like the time isn't right. Maybe you've been saving up for new AirPods or a pair of shoes, or maybe the stars just aren't aligned and you're not making enough money yet, so you start to invest in 2026. Guess what? That $1 you're investing 5 years later only becomes $6. That's about half of what you could have gained if you were to invest 5 years ago. That just goes to show that your money has more power when you start young. And that's because every year that goes by, you lose 1 year of the compounding effect. Remember that this lost year doesn't come out at the beginning of the curve where your money's compounding slowly. It comes out at the end where your money is compounding actually quite fast, and that's where you see that you're making more gains every year. I guess the main message that I'm trying to get across is that the younger you are, the more power your money has. But of course, there are other advantages to starting early. First, if you're young, you can actually take on more risk. What this means is that if someone's going into retirement in the next 2 to 5 years, they probably don't want to put their money in the stock market. If something were to happen and the market crashes, guess what? You need that money for your retirement. So you want to take on as little risk as possible. On the other hand, when you're young, you can actually rebuild because you have time. Also, you can always learn from your mistakes when you start early with smaller amounts. Remember, time is everything when it comes to investing. And there's a saying that goes, time in the market always beats timing the market. Well, that's the end of the video. Thanks for sticking around. I hope that you learned a thing or two about investing and that maybe it's inspired you to think a little bit more about your future. If it has, you can let me know by leaving a comment in the section below. If you enjoyed it, you can like the video and subscribe for more content in the future. Thanks for coming. I love you.